Good morning, traders. Happy Monday. Happy 2024. Thank y'all for joining me. My name is Charles. I run a community called Piratetraders. We are a set of traders that are focused on the ES, the NQ, and the two-way auction process. And I'm here this morning to talk to you about that. So first things first, let me just take a moment to quickly explain what the different software is that you're going to see on the screen throughout the live stream here today, and then we'll get into some specifics about what's happening in the market. Okay? So over here on the left, this is a market profile chart. This basically is very similar to candlesticks, except that it takes the same information and it plots it out on a bell-shaped curve. Okay, so the advantage that lets us have by looking at the market's information on a bell-shaped curve is that it makes it easier to see the specific price levels where the market likes to do business. Okay, so the way that differentiates from a regular chart, let's just pull up a regular bar chart. All a regular bar chart is showing you is where the market opened, where it closed, where the high and the low was, and then how much volume traded in that particular time period. So you know where the market went in terms of price movement over whatever given amount of time, and you know how much volume traded during that given amount of time, but that's all you know. You don't know specifically where the business took place on the vertical axis. Well, that's what market profile shows you. By showing you both how much volume trades in a certain area and how much time the market spends in a certain area, it can give you insights as to which price levels have the most relevance. Okay? So the market profile allows us to map out the market and understand where the market wants to do business and what type of opportunities exist at those locations. So then we let our eyes roll right on over to the right side of the screen, which is where we have the Bookmap software. The Bookmap software is for watching the order flow of the market. So essentially, all these little colorful things that you see up on the screen here, this is called the heat map. Okay? The heat map is really the magic of this tool because it allows you to see where the liquidity is currently in the order book. Okay, so where are traders wanting to do business? And then where was the liquidity in the past during different moments? So the market profile lets us see where the market did business. The heat map lets us see where they were willing to do business. It lets us see where the market, what the market was trying to do. And by comparing what the market is trying to do with its liquidity to what it is actually doing with its price action, you can find opportunities where you have an edge over the competition, where you see an opportunity that others are missing because you see the setup and then you see how it plays out. Okay. And then lastly, we may end up talking a little bit today about market internals. This is a set of tools that I use to kind of give me a look under the hood of the market, so to speak. This looks at the actual NYSE and NASDAQ and measures, the type of momentum on those on that exchange level. And then that gives me insights. If people are buying stocks, they're probably going to buy futures, right? The futures are going to come along for the ride because of arbitrage or vice versa. Okay, so now let's give ourselves some perspective for this morning, right? It's a new week. It's a new year, really. And it's a new week, so we want to start fresh. We want to zoom out. We've been super focused on trading over the last week, and so we want to give ourselves some perspective. So the first thing that I'm going to do is I'm going to go all the way out to the monthly chart. Now, it might not seem like that chart just looks so crazy to me now that we're back at all-time highs. We've been in a bear market for so long. I've been looking for resistance in here. So even just clicking on it now, it's like, man, it looks bullish. Looks like it's going the other way. Anyway, okay. So the reason that we start zooming out all the way on the monthly chart is because it changes our perspective. If we've been so zoomed in We've been so focused on what the market's been doing over the last few hours or the last few days or the last few weeks. By stepping back and looking at it on a monthly time frame, sometimes we can get some clarity. So what do we have on a monthly time frame? What jumps out at me? Well, first and foremost, on a much longer multi-year time frame, the market had excess. It pulled back with price to balance off that excess. It has now returned back to the level where it ran out of steam, the previous all-time highs. That is a setup for the market to either continue higher or look above and fail the all-time highs. So I know, obviously we're not talking about today, but I know over the next few months, what happens with the market is very, very important to give us insights for what will happen over the next few years, right? Either this thing is going to keep the momentum going or it's going to fail and we might have another year or two of sideways inside of this range. So we're at a very important area in general this month on the monthly time frame. It is also bullish to me to see that on the monthly time frame, we had excess, okay? We were making higher lows and higher highs. And so far this month, we have an inside month. So right now, there's no information as to whether the market is going to continue higher or not. But if we poke up and make new all-time highs at some point in this month, we still have momentum on the monthly, which would be bullish to see. All right, so we'll zoom in a little bit and we'll take a look at the weekly and see if there's anything else that jumps out at us, anything that's different from what we just saw on the monthly, now that we have a little more information. Okay, well, first off, talking about the excess and balance, this is a lot of excess on a weekly time frame. Okay, that is nonstop higher highs, higher lows every week. For, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. That is a lot of excess on a weekly time frame. One thing that we understand about excess and balance, they work a lot like yin and yang. The more excess you create, the more balance you need to balance off all that excess. Now, there are two ways that the market can balance off excess. One way, it can choose to just go sideways at higher prices for however long it needs to until it has balanced that off using time, and then it can continue higher. Or you can balance off the excess using price. You can get a big move to the upside, and then the market pulls back down with price. That dip brings in the buyers to turn around and keep that thing going. Okay? We don't know on the weekly time frame which of those two is going to happen yet. But we do know one of those two is happening. Okay? And that is fantastic because it gives us insights to carry forward. So what are we looking at first and foremost? Well, on this weekly time frame, what type of balance are we going to get? Are we going to get balance with time or with price? If we start to make some strong lows this week, okay, and reverse the market back up, well, then we know the market is balancing with time. We look to test the previous all-time highs, and we do not fall in love with the trade. We take profits at the previous all-time highs, and then we wait and see what happens there. Either it looks above and fails, or it looks above, finds support, and we keep going, in which case we're bullish as a breakout of balance. Maybe that's all it needed. Just that 2 weeks was all it took, right? Or if the market continues the momentum to the downside on the day time frame, we know we need to balance off this excess with price. We're looking for a larger pullback in price. So then we're monitoring for continuation lower. How much longer does the market keep giving us signals that it still has momentum down? That's the insights we can take away from the weekly. Okay? I would also say this could be a setup for balance on the weekly. The candle that we made yesterday, if this week can stay inside of there, would set us up for some sideways. Let's wait and see. And then lastly, we will zoom in and we will just take a quick look at the daily chart and see if there's any other insights that pop out at us when we look at the daily chart. Well, first and foremost, we can now see we have quite a bit of excess to the downside. We've been talking about all this momentum and all this excess to the upside because of this large move, but we've now on a much shorter time frame. Over the last week, just day by day by day, we're creating momentum down in price. So that tells us what we're going to find out from today's candle is, do we get continuation of that momentum lower, which is balancing off the previous excess with price, or does the market work its way up today and make a higher high on the daily time frame? If the market can work its way up and make a higher high on the daily time frame, well, then we're probably balancing with time. So each one of these insights, starting with the monthly, zooming into the weekly, zooming into the daily, tells me quite simplistically that one of two things is likely to happen today. Either the market is going to get above yesterday's high, and that's going to lead to balance with time over the next days, weeks, who knows, right? Or the market is going to break yesterday's low, which is a sign of continuation of the momentum lower, in which case I want to be very bearish because we need a bigger pullback with price. We know we need a bigger pullback on the monthly. We know we need a bigger pullback on the weekly. So if we start to make new lows, I'm looking for a much bigger move to the downside. All right, so where would I be looking for the market to do business if that were the case? If the momentum to the downside continued? Well, then I'm looking at these previous highs in here. Okay, somewhere around that 4,600 number. That is likely to be the next major support. It might be that we just barely have to touch it and then we can turn around and head higher. It might be that we have to kind of grind around in here one more time and then we turn around and head higher. But the next major support is these previous highs as a balance of price, not time. And of course, this is that gap that was created by having a contract rollover followed by FOMC that was bullish. So if the market needed to balance off that, excess created from the contract rollover / FOMC, 4,600 is where it's got to come back to. So Charles, you're telling us it could go up, it could go down, or it could go sideways. Thank you so much. Yep, that's what I'm telling you. Have a nice day, everyone. Bye-bye. I mean, that's it. That's it, right? That's all we need to know. But by knowing it could go up as a continuation of balance using time, we know how to monitor the strength of that move. If they're able, so now we're zoomed in looking at the intraday market profile. So now we're able to say to ourselves, can they get the market up above the overnight high? The overnight basically just means everything from the close on Friday to the open this morning. Okay. So the overnight, can we get above their high? The highest level that they could get in that over the weekend. If we can get above there, we know that's the first sign that we might be trying to balance off with time. If they look above and fail, well, that's bearish to see because it means we're probably not, right? Which means we're probably balancing with price. Okay, great. Well, let's say they get above there and they find support and they keep going and they get all the way up to yesterday's high, up at 47.60, right? Well, if they get all the way up there and then they poke above, now we know the higher probability is that they're going to balance with time, right? Now we know the chances that the market's going to keep going lower are significantly less. Because if the market wants to keep going lower, it should not make a higher high on the day time frame. It should keep going lower today. So if we get above yesterday's high, that's the second signal of balance with price and the first signal balance with time and the first signal against balance with price. Okay, great. Then once we've poked above yesterday's high, can we stay above there, right? Once we get above yesterday's high, what happens to the market? Does it instantly go and run out of steam and pull right back down? Or do they get up there and all of a sudden there's FOMO and the momentum picks up, the tempo gets faster, new volume starts to come in? If that's the case, well, then we know for sure we're balancing with time. And so if we're balancing with time, what was our target when we were back looking at the weekly time frame? The previous all-time highs, right? So as crazy as it seems, if the market can get back above the high from last week and stay up there, that means it's likely going all the way back up to all-time highs. So we want to be very bullish if we see that. But what about the opposite scenario? The scenario where the market pushes down instead of pushing up? Well, as soon as we get below the low from Friday, okay, which is 47.20, then we know that increases the odds we're balancing with price. And that decreases the odds we're balancing with time, because that momentum on the day time frame is continuing. So that is very bearish to see. Okay, so the next target becomes testing the overnight low, and we see what happens there. Then the next target is testing potential support at 47.09, which is a base of single prints from last year. We see, can that hold? If not, then we're looking to test 4,700 and we're monitoring for continuation lower. And the further down it goes, the more and more bearish it is, because it's just proof they are not balancing with time. They are balancing with price. And where is it eventually going if they're balancing with price? 4,600 area. So it's a party, guys. We could have some fun today. We are set up for some excellent opportunities. And I'm pretty excited. 15 minutes till the market opens. Hit me in the chat. What do you want to know? What are your questions for me this morning? Good morning to Will. Jay, who says, thank God it's Monday and the casino is open for business. Bust a move. Hello, hello. Ships. Hi to you. David G in the house. Mike who thinks. Jay. Ken says Q, please. Yeah, let's take a look at the NQ. Actually, let's just really quickly, we've got plenty of time. Let's do a top down on the Q as well for some perspective. Oops. Okay. All right. So looking at the NQ here, obviously it looks very, very similar to the ES. It is a very similar structure. It is a little bit more bullish, and I'll explain why, but it is basically exactly the same, which is that on a multi-year time frame, the market created excess. It balanced it off with price. It worked its way back to the place where the market ran out of excess, the previous all-time highs, and now we're going to find out what comes next, right? Exactly the same as the ES. Can they keep the momentum going, or do they need to pull back and we maybe spend another year or two in this range? Zooming in and looking at the weekly. Yeah, I mean, it's almost identical to the ES. So yeah, same exact thing. Weekly time frame. You just have all this excess to the upside for however many weeks that is. You probably aren't going to balance that off in just 1 week, right? You're not going to have that much excess and it's instantly over and then the thing just keeps going higher. It could happen. I'm not saying it can't happen, but I'm just saying that is very unlikely. The higher probability is that you need to balance off all this excess on the weekly time frame. So you're probably going to need to spend a couple weeks balancing. Is it going to be with time? Or is it going to be with price? Well, we'll wait and see. Let's zoom in on the daily. So yeah, it's exactly the same. Exactly the same as the ES. The one thing I would say is they came very close to making a higher high on the daily candles there. If they had done that, that would be a sign they've had enough of a pullback. Okay. Another thing that is different about the NQ and the ES is that, and I know this is going to get confusing when it's like we're balanced inside of balance, blah, blah. But there was a shorter time frame balance area up here on the NQ, okay, and the ES, which they both failed last week, and we were talking about that on the channel. But the reason that that's important is because when you have a move like that, you often get excess the same scale as the balance. So you would expect the market to make a move, boom, right to where it did. So technically, over a weekly basis, that might have been all the balance the market needed to the downside. And so you might be going sideways. So it's a little bit less bearish, but it is still bearish. No doubt about it. All right, so let's zoom into the market profile chart and look for some levels on the NQ. Yeah, I'm going to make it real easy for the traders who have patience here. I pretty much see the NQ as like either we get above Friday's high today around 16,589-ish, okay? In which case this thing's going up because it's done with its down move and it's going to either go sideways or up from here. Or if we get a lower low, we're heading back down to fill the gap. So basically look for a very difficult, choppy day inside yesterday's range because this could be the beginning of balance. It really could. It could be the beginning of some sideways here. The way you've got all these lows, these very strong lows. So I would be much less bearish on the NQ today than the ES. However, the second they make a lower low in the day time frame, man, it's going down. It's going all the way to 16, 11, 18. But inside yesterday's range, which is a large range, between 16,403 and 16,570, it's 77, it's just going to be chop, like just grinding up and down and up and down and up and down and driving everyone mad. So it's going to be a tricky morning on the Q, I think. Sorry, Q traders. Sorry to be the bearer of bad news. Any other questions from the chat? Good morning to Percy, Grizzly Bull, Ken, and Ernest. Welcome, welcome. I also think this little node of volume that we're seeing down here, node of liquidity that we're seeing down here in the order books at 47.05, I think that is there for a reason. Anytime there's a random level with that much liquidity kind of just randomly sitting at an exact place like that, which to me it is a very random place, that is likely trying to be a magnet. It's trying to give sellers a reason to head down there, thinking they'll be able to take profits into that liquidity, thinking that the momentum to the downside is going to continue and that they should be bearish. And then that's the type of thing where maybe they get right below yesterday's low. Maybe they get to like 47.18, and then poof, it disappears. If that happens, it means we're going nowhere. We'll get a look below and fail, and we'll just go sideways the rest of the day. But if that stays there until price gets to it, well, it will be a magnet, I suspect, to pull on price. So I'm just going to keep an eye on it throughout the day, kind of keep zooming out and seeing, is it still there? Or has it, poof, disappeared? Five more minutes to market open. Any questions for the pirate? Speak now. Good morning to Philip, the demo trader. Welcome. Thank you for the reminder. Yes, everyone, please smash that like button. We got 93 people hanging out, but only 22 likes. So that means most of you hate me. And that's not cool, okay? So you better push the thumbs up button, or I'm gonna feel unloved in this moment. Hey, 37 likes. Crushing it. Good morning to Nor Auto Trader and Frito. Welcome. Percy says, Charles, can you do Bitcoin? I can. There was a twinkle in my eye this morning when I saw Bitcoin. It just won't quit. It just won't quit. All right, so this is a messy chart, but basically I'm bullish on the corn. I'm looking at this large move to the downside, and the fact that the 618 is at around 4,800, and I'm thinking that's where we're going. There's just a lot of support that continues to build. They are buying the dips. You had horizontal balance here, excess, balance, failure right into balance, failure right into balance. And now you're breaking out once again. So I would like to see Bitcoin work its way up above 4,600, then come back down to 45 again and turn it into support one last time. And then I'd be bullish for continuation up to 48. Good morning to Nap. Truman says, if they make a new daily high in the overnight, is that still a sign that there is enough balance done? It's a good question. So no, if they'd have made a higher high in the overnight, right? They'd poked above the high that we left behind last week. That would have been a signal that the market was running out of steam. That would have been a signal that we were more likely, to test the previous high during the regular trading hours, but it would not be a failure of the momentum. If the regular trading hours open and they're inside the previous day's range and they work their way below the previous day's low, then it's continuation of the momentum, and it doesn't matter what the overnight did. In the same way with the lows. Right now, the lows of the overnight, both on Friday or Thursday night and then over the weekend, are telling us that the overnight thinks this is support, right? They think that this is going to hold and we're going to go sideways from here. But the regular trading hours have to do it. It doesn't matter until we get above the previous high. We find support. We prove that it's going to keep going. Otherwise, we could just smash right through all this support, squeeze all these traders, and keep going lower. So we are opening inside the previous day's range. That tells me that we are likely in what we call a chop zone. A chop zone is basically when the market just needs to play tug of war for the first maybe 20 minutes, maybe hour or two of the day. The market just needs to chop around and grind around. I would call that chop zone high, the area that it will be stuck inside, 47.46. The reason is because we have that weak reference that needs repair. It looks like that's what we're heading for. So that might be all the market wants to do, is just poke up there and repair it, and then it comes right back down. So that's my chop zone high. And my chop zone low is going to be yesterday's low, down at 47.20. So as long as the market is between those two levels, it is likely to just keep grinding and grinding and grinding, maybe for hours. Get as many traders long as they can, then come down and get as many traders short as they can, and then come back up and get them long and get them short and get them long and get them short and get them long. And then out of nowhere, they break one way or to other, and they squeeze half the traders. So I believe we are looking at chop here for a good, at least half an hour or so, and we will look for signs that it's trying to break one way or another. Okay. Because it's a chop zone. All right, we're above the overnight high. That is a little bit bullish to see. But really what matters is what happens now that we are. Do we just repair 45, meaning we poke and get a point above it? And then once we do we turn the overnight high into support, 47.43? Or do we fail, pulling right back into the overnight range, leading to more chop? Let's see what happens. Nor says, Q, Nor, you were just a minute late. I did the Q. We'll pop in real quick and we'll look at some intraday levels. Okay, so Q, bullish right now above the overnight high, short term. I would say that's a breakout of a chop zone type of move. So that increases the odds that they're testing. They want to at least try to test yesterday's high. If they get above yesterday's high, if they get above 16.5, 78.50, that would be, how do I describe this? The least bearish scenario. That would tell you that they are no longer trying to take the market lower, and the market is either going to go sideways or higher from there. So you'd be looking for support at yesterday's high and continuation higher. Bullish, isn't exactly the right word, just not bearish. But yeah, it would be a little bit bullish, especially if they can turn that into support. Now, if they pull back through the opening price at this point, if they pull back through 16.512, well, then you're just going to get chop inside yesterday's range. Okay? It's a chop zone. I think it's going to be a very choppy morning for the Q. Okay, so there is the repair of the weak reference at 45. So here is where we find out, do we really have the buyers? If we do, they should be able to hold support at 47.43. If they fail, more chop. Chat says, do you trade live every day? I don't trade live, but I'm trading, but I'm not telling you guys my trades. I just talk about the market live. I do market commentary every day. And if you want to join the party, just head to Piratetraders.io and sign up for the brigade, $10 a month. They say it's the best deal on the street. That's what they say. That's what they say. Okay. Okay, so we got a week high, and we've got some new buying up here. That's a little bit bullish to see. Can they hold 47.43? Frito says, is that the word on the street? Yeah, dude, Frito, that's the word on the street. That's what they say. Thank you, Bust a Move. Thank you, Jay. Good morning to Arjit. How to watch them? Just like this. It's on YouTube. Head on over to Piratetraders.io. You'll see all the info there. Okay, so we still got FOMO buying. It is new buying, but they're not letting it test that overnight high. Well, Charles, why does that matter? Why do we care if they pull back and test support? Because testing support lets stronger hand buyers step in. FOMO is weak hands. They're traders that are buying at the high that can easily be squeezed if the market pulls back. Whereas the traders who buy the pullback, who buy the support, they are stronger hands that can be trusted. So it is nice to see volume up here. It is nice to see new buying, but we need to test support. We need to give those stronger hands a chance. Okay, that's bullish. They are breaking out of the chop zone, increasing the odds that they want to test yesterday's high up at 47.60. I will remain, again, it's hard to make a call bullish when the market is trending lower on the day time frame. But I will say intraday for the moment, I am bullish as long as we stay above the overnight high. As long as that potential support at 47.43 holds, I will continue to assume the market's target is testing the high. Okay? If the market pulls back down into the overnight range, it gets back down below there, well, then I know I'm wrong and we're just in a chop zone and I'll expect more chop. So can they hold it? They've got the buyers. They've got the target. Let's see what happens. Woo, look at that, man. Some computer is like desperately trying to get short here. That was weird. Okay, support is holding. All right, moment of truth. Looks like we are going to test 43. If the buyers can hold it, they've got the momentum for yesterday's high. If they fail, more chop. Can they hold it? Oh, no. Nope. All right, that's a look above and fail of the overnight high and a continuation of the chop. So that doesn't mean the market is not still going to go higher today. It just means they're not ready right now. Got to spend some more time going sideways before we'll have the buyers to attempt another move up. So I am now looking for support. 47.36 and then 47.34. And more chop. All right, NQ testing yesterday's high. So this is very, very important. Do they make a weak high and fail here, or do they get above yesterday's high on the Q? There it is, above yesterday's high. Okay, so this changes everything. This is a sign, as we discussed, that the intraday, or sorry, the daily momentum to the downside is over. So that significantly increases the odds. For one, throughout this week, we're either going to go sideways or we're going to start to pull back with price. And it also increases the odds that we don't need a larger pullback on a weekly time frame. That the higher probability is balance on a weekly time frame at higher prices. So all of that is bullish to see. So intraday, can they hold it or do we get more chop? But on a daily time frame, a higher high is a sign the momentum down is over. Act accordingly. Next question, will the ES follow suit? I absolutely hate these icebergs. This is a certain type of thing that happens where someone somewhere has a program where they basically just latch an iceberg to like whatever, 5 points or 3 points or whatever it is from price. And they just follow price all day. And when one of those is there, it's a bitch. It's always really tricky. So I am back to being bullish once again as long as we stay above 47.43. But I would caution everybody, this looks like it's going to be choppy. Oh, no. SC says, does the test of the zero line on the internals equally important? You're talking about the ticks. Yes, that is also bullish. So again, the market's in a chop zone. It's trying to figure out who's going to take control. Now we're back above the overnight high and the ticks are trending higher and above the zero line. That is also bullish to see, further increasing the odds that the market wants to test yesterday's high at 47.60. However, I just want to caution everybody, I do feel like it's going to be a very choppy ride. I don't like this iceberg. These things, whenever one of these pops up, the market is really weird. So you do that with the liquidity. You got this pocket of liquidity down here, and that one we talked about earlier. Oh, that one disappeared. But you still got this one. There is a magnet tugging on price, trying to prevent it from getting to yesterday's high. So it does seem like it's going to yesterday's high, but it's just going to take some effort to get there. Maya says NQ, please. NQ is bullish above yesterday's high, neutral back inside yesterday's range. So bigger picture, it's not bearish, right? Bigger picture, making the higher high today means the market doesn't need to keep going down. Means for the next few days, next few weeks, it's fine going sideways or going up. It's done going down. That's what the higher high tells us, but that's on a daily time frame. Intraday today, it's a matter of, do they have the buyers to keep it going or not? So they got to hold that high at 16,578. As long as they do, they have the buyers, and they'll keep it going higher and higher and higher all day long until they get cessation of the momentum. But if they pull back down into yesterday's range again, well, then they probably don't have the buyers intraday today. So we go sideways until we do. So just bullish above the previous day's high. And ES is bullish above the overnight high. See, that's the kind of shit they do when those icebergs are there. Okay, so once again, testing the overnight high. It did not hold the support the last time. Will it hold this time? Nope. Man. Gonna be a choppy one today. 'Cause they got the games they're gonna play. The bots wanna get you long, squeeze you strong, and then do it again. Yeah. All right. So another failure at the overnight high again increases the odds we need more chop. So I still believe, same thing I said last time, we're heading to yesterday's high. We're just not ready yet. Need more sideways to bring in those buyers. And I suspect we won't get there until this iceberg disappears, this funky whatever it is. Okay, I'm now officially keeping a close eye on this node of liquidity here at 47.33. The market was trying to head lower and it turned around. What did they do? They started bringing in liquidity here. They wanted to turn it into a magnet for price. The market continued to move away from it, so they added more liquidity to try to make a magnet to pull back price. Price then made a pullback towards it, but didn't quite make it, turned around and started heading up again. What did they do? More liquidity. So they are trying to turn 47.33 into a magnet to pull price back down. So if the overnight high can hold and this disappears, it's going to move much higher very quickly. But as long as it's still there, they got a magnet tugging on them, keeping them from taking off. So I'm watching that. Very choppy. So here, as price starts to move away, do they start adding more liquidity there? Or do they start disappearing it? Do they start giving up on it? They're pulling it away. They're giving up. You see? The color is getting lighter and lighter. We went from dark red to lighter red. Somebody just gave up. Probably the same person that just got stopped out of 100 shorts all at once. Sucks to be you, bro. Rob says 2 good setups I missed so far. Don't feel bad, dude. This is so choppy. Choppy markets are always the kind, choppy markets like this, they're always the kind that when you look at them in hindsight, it seems so simple. Let's say right now the market works its way above yesterday's high. You'll look back at this chart this afternoon and it'll look like, oh, we opened, we pushed above the overnight high, we spent a little time, we brought in a little volume, we went to yesterday's high. It'll look so easy. It'll be like, oh man, look at that. It just, perfectly worked out. But when you're there in the moment, man, it's tricky. It's so choppy. It's so difficult. It tricks you one way. It tricks you the other way. It sends you all these mixed signals. It slows down to get you bored, and then it moves out of nowhere very, very quickly. So yeah, that's the bitch of chop. It's easy to read and understand what the market is doing, but it's hard to enter trades. Okay, so obviously we got some sort of news here at 10 a.m., giving us a little news bottage. They created a poor high on the market profile chart. A poor high increases the odds that the market will push away from the price, looking for support, but once it finds support, it will come back and it'll poke through the high and continue higher. So that is actually bullish to see, even if the market goes down, because it means it's going down to find buyers. All right, so I also just wanted to mention today is the last day of the promo for my upcoming workshop. Those of you that follow the channel know that I'll be teaching a workshop in February called Mastery of Markets and Mind. It is a 2-week workshop, 4 hours a day. There are webinars from 11 a.m. to 3 p.m. each weekday for 2 weeks. If you can't be there for the live webinars, the videos are available afterwards, so you can watch them anytime. And I teach everything there is to know about trading. Like, it is all encompassing. I will teach you how to read a chart. I will teach you how to manage risk. And most importantly of all, I will teach you how to analyze your own thoughts and behaviors in order to develop a system best suited for those thoughts and behaviors, right? Building a custom tailored system for you, which only you can do. So that workshop is going on a month from now in February, but today is the very last day to get the discount price. So with promo code HAPPY2024, you can save yourself 30% today. Head on over to marketsandmind.com if you want to sign up for that. And if not, come hang out with us in the brigade. I run a community called the Piratetraders, and we have a membership group called the Brigade. It costs $10 a month, and you get to hang out just like this every day for the first hour of the day. With that, I will say goodbye because I got to go hang out with the Brigade members. Got to have some fun. As far as making calls for the market moving forward, I would say bigger picture. I believe that if the ES can get above yesterday's high, right? It's always a if. If it can get above yesterday's high, then we know for sure. But if we can get above yesterday's high on the ES, I think we're probably looking at a sideways or higher week this week. Because if they wanted to take the market lower, they should not make higher highs today. So that is why I would believe we're either going sideways or higher over the week this week. And intraday today, as long as we remain above the overnight high, as long as we are above 47.43, I believe the highest probability is that we want to test yesterday's high. From there, we will do what is called monitoring for continuation. So we just assume it's going to keep going, and we look for signs that we're right. Do we get support? Do we break through resistance? Okay? There's the repair of the poor high, a sign that the buyers are in control. Bullish to see. With that, I will say goodbye to everyone in the Bookmap. I love you. I appreciate you. Happy New Year. We'll see you next week. Members of the Brigade, let's ride.